All right. I hope that people are starting to jump in now for today's webinar. We always start a webinar with a woohoo when I'm in the house. So welcome everyone and thank you for tuning in today. I think we have a power-packed session today. We're going to talk about SaaS trends and of course around metrics and the role of financial data in 2025. And I have two people who will do a power-packed discussion around this today. So warm welcome to you, Ben Murray, the SaaS CFO. Great to have you today. And also warm welcome to Niclas, CEO and founder of Younium. So I got asked to do an introduction of both of you. And Niclas, obviously, I know you quite well. But Ben, we never met, but I know you're a big name in B2B SaaS. So I actually asked a friend of mine, we've been friends for 2 years almost, and that friend is ChatGPT. So I'm gonna read out like a nomination here, and after you can give me just a thumbs up or thumbs down if it was good or bad. So let's give it a go. Ben Murray, known as the SaaS CFO, is a powerhouse in the B2B SaaS world with a deep expertise that spans from strategic financial planning to hands-on operational insights. He's well known for his ability to break down complex financial concepts into clear, actionable strategies, earning him a reputation as one of the leading voices in SaaS finance. And speaking about breaking down financial concepts, when I started at Younium, it was the first time I worked with CFOs as my main persona. So your newsletter, the SaaS Metrics School, was actually of big help for me.
Well, I love it. The ChatGPT did a great job. So I love that intro. Appreciate it. Great to be here.
Otherwise we can, throw ChatGPT under the bus. Niclas, I know you quite well, but you will get exactly the same treatment as Ben here. So Niclas Lilja is a visionary leader with a true passion for helping B2B SaaS companies streamline and optimize their subscription management and billing process. He founded Younium with a mission to empower fast-growing companies to navigate complex subscription models and make informed decisions through real-time SaaS metrics and financial insights. And Niclas, I happen to know that you're also a builder at heart. I mean, we're sitting here, you built Younium, and you also like to build Excel spreadsheets, and that is also something that sets you and me apart, I would say. But I also know that you occasionally like to build a Lego masterpiece and you want to build a house in the future. So I hope that you will set some time apart to do that. Great. We can move on to the agenda. So we have...
Thank you, Klara.
Oh, you're welcome. I tried to, get into the details. No, but we will have 45 minutes for this webinar today. It's being recorded. You will get the recording within a few days. We will have 10 minutes at the end for Q&A. So I really want to encourage everyone who listening today to actually ask some questions. You can just pop them right in the chat. And we want to take some polls of the audience. So we will actually have a poll coming up right now. So if we look at 2025, what kind of growth motions do you intend to use? And you can choose everyone or multi-select. So let's see here. Oh, nice. Oh, it's a really nice split here. This is interesting. Okay. As a commercial account executive, I love sales-led. 57% said sales-led, 62% product-led, 24% growth-led, and 38% partner-led. Nice. All right. But now I will hand it over to you, Niclas, and you, Ben. The stage is yours. And I will pop in within 25 minutes and say hi to the Q&A.
Sounds good.
Thank you, Klara. Great introductions. Maybe follow up on that a bit. Ben, I mean, I know I asked you before, but how many subscribers do you have now for your newsletters?
For my SaaS CFO, about 75,000 now.
75,000 people who really like this subject of financials and you know, data and metrics. And how long, you know, what's the age of the SaaS CFO?
I'd like to say it's age, you know, not one of those overnight successes. So I started my blog, So Cliched, in 2016, you know, from zero, no website visitors, no downloads, first newsletter. And, you know, so 8 years now of growing that and generating some content about SaaS finance and metrics.
I guess grit always plays a role, right? Sticking in there. But curious here, I mean, that's some 8 years, if I'm not wrong. And you've seen like this industry taking shape and maybe changing a bit and, you know, evolving. Would you say there are differences in the focus of like SaaS data and like how financial departments are operating in SaaS companies now compared to 2016?
Yeah, definitely. And I got started in software in the early 2000s, you know, in the on-premise days, you know, charge 20% of the one-time software fee as maintenance. And even that, you know, it's definitely changed over time. And even working with SaaS companies who are still, well, software who are still making that transition from on-premise to subscription to SaaS. So the model has changed, pricing has changed. You know, I'd say SaaS 1.0 pricing used to just be subscription revenue, maybe some services for onboarding. Now we could have, say, 5 revenue streams in our SaaS business today. So I think it's gotten much more sophisticated and mature as how we're managing. Plus, you know, as CFO, to keep up with what's happening in the market with pricing models, business models, and SaaS.
Do you think that sets SaaS apart from other industries when it comes to the job or, you know, the Department of Finance?
It could. I'd hate to say we're different, but you think manufacturing, right? Manufacturing has been around for, you know, I don't know, hundreds of years, and so maybe that business model is kind of set. But SaaS, right, it's still early. You know, software is still early, and SaaS is evolving. And now, of course, with AI and maybe AI pricing mechanics, that it continues to evolve.
Sure does. But like, if we start then from a high level, would you say like the high level metrics, are they the same or has something drastically changed? Or are we still talking about the, you know, in general, the ARRs and maybe the retention metrics or, you know?
Yeah, there's still some fundamental metrics, and I'd love, yeah, please post any questions in the comments there. But yeah, we still have fundamental metrics of our growth story. What are our bookings doing? And even if we're self-service SaaS, you may not speak the bookings language, but we still have to know where is new and existing growth coming from. And then are we keeping those customers in the form of retention, customer, gross revenue, net revenue retention, which is often trickier to calculate than you think until you start doing it based on your MR schedule. We still need to know our margins, our financial profile, how much we're investing in R&D, for example, and then efficiency. Today, it's such a hard balance between growth and efficiency, but really, I like to say sustainable. We need to have a sustainable SaaS business, and those our metrics are going to help us in that journey.
And you mentioned the different revenue streams, and I know that you have, you know, schools, you have academies, you have, but like if you would do it really, really quick, what are the typical, you know, revenue streams that you like to see in a P&L?
Yeah, definitely. So if we think about a SaaS P&L, which is so important, there's so much good data that comes off a SaaS P&L. And now, again, the early days, maybe it's just little subscription revenue services, that's it. But now I've helped companies with, of course, pure play subscription revenue, variable revenue, which could be usage, processing, transaction, consumption. Now we'll see AI pricing. We'll see, you know, if that creates a new category, you know, the whole Salesforce outcome-based pricing, professional services revenue, managed services revenue, which is people-powered subscription services revenue, hardware, say you have a point of sale system and a hardware play, and then the other bucket. So that's, I've helped a lot of SaaS companies at this point, and that's like the largest revenue footprint that I've seen.
Mm. I love seeing those nuances, and it's not always only that one SaaS line, that pure play. I mean, I think most companies definitely have a lot of variance into this. If we still continue with that, I'm just curious, like you said that we're getting more mature and more maybe nuanced, and like, are we, or do we want to? You know, like,
Well,
where do you think we are as an industry, or yeah?
the framework is evolving, but one, it's just the fundamentals. It's like, all right, what's reality within our SaaS company today? What are we measuring? What are those metrics? And of course, benchmarking those metrics. And of course, I've helped a lot of SaaS companies, and usually it's hard work. And there are 4 key SaaS finance data sources that we have to spin up to have a good FP&A process, right? It's probably budget season right now for a lot of people for 2025.
Yeah.
And that data we need in our finance department as a CFO, we need bookings data. We need good, clean financial data. We need, and within financial data, we need a good chart of account structure, GL coding for revenue streams, COGS versus OPEX. What are those cost centers? Then we need HRS data. I've seen this all the time. We've got payroll. We're paying out employees and contractors, but they're getting posted to the wrong spot on the P&L. I was just in a board meeting this morning talking about customer success sitting up in COGS. And what do they really do? Is it really customer success? Is it onboarding? Is it tech support?
Yeah. Yeah.
And then finally, customer/revenue data. We need to have those MRR schedules, those MRR waterfalls, maybe by product line, by ICP, by geo, to have that transparency. One, right, budget season, to build a nice budget, to have an accurate forecast. So there are the fundamentals that we have to put in place before even like maybe thinking about getting fancy with other stuff first.
And maybe also seeing that all companies may do things a bit differently and really see things for what they are and how they relate to, you know, revenues and such. I guess we can get stuck in the P&L for ages here, but let's move on a bit as well. I'm just curious, like, so I have the P&L, which I guess would be very much for the financial department, and like you would have the reporting and all of that. But do you also see like how this is being used, not only for the finance department, but has there been a shift of using this in multiple departments and maybe more on a day-to-day basis, or is it still very much like a monthly report that comes out and you see what it is, or like what is the trend there?
Yeah, it should be the SaaS P&L should be more than just page 10 of your monthly pack and no one talks about it, because there's so much good information that comes from that. Gross profit, margins by revenue stream, OPEX profile, EBITDA, revenue categories,
Yeah.
and now
Yeah.
department budgets, holding department leaders accountable. So our ELT team, our executive leadership team should be well versed in the SaaS P&L. I get other folks, I have an academy teaching SaaS metrics finance, and get CROs in there, VP of sales, product marketers who need to speak the language of SaaS. They don't maybe have to calculate all those metrics, but they need to understand SaaS speak. So I think part of my role, when I was in-house CFO and now fractional SaaS CFO, it's educating founders, educating that ELT team. Why are we measuring these metrics? Why does this matter? And so we, as CFOs, we have to influence, right? We have to influence decisions, and we have a lot of tools available. We just have to make use of those.
I think that's interesting. Like, you say when you work, do you think that is a general trend, that like the role of the CFO is changing a bit to be more educational, or is it only you doing this in your line of business, or like yeah?
No, I think, I worked in the airline industry and then got into software. Same thing. When I was in business unit finance, still educate in FP&A, educating those department leaders who may not be versed. What's a budget? What's a forecast, right? They're very operational. So part of that, being a good FP&A person is educating in that process, especially now. And as CFOs, we need to influence, right? We're the data stewards of the organization. There's so much tech going on behind the scenes to run our SaaS companies. We have to be involved in those decisions as well, because things are getting too complex. And with data, we talk data so cliched. Yeah, we got to use data, but it's still so true today that we have to unlock that data. And SaaS companies are just a treasure trove of data but we've got to leverage that. So that's why CFOs have to be at the table with the data decisions, with tech decisions, because now think quote to cash, like all this is coming together in different components.
Yeah. And it's not only like financial data, right? There are other data as well that not necessarily gets all the way into a P&L or a balance sheet, right? But there are other measures along the way that you need to take into consideration and see how they affect the revenue streams, how they affect the different cost lines, how they affect different products, etc. What when we look into challenges, then I think that, you know, everyone wants to, you know, have all that data, have it structured perfectly, you know, being able to draw really good conclusions, finding the right decisions, etc. But what are the typical challenges that you see with the companies? Like, especially I think like as they want to scale and maybe move from a phase to another, like what are the typical pitfalls?
Yeah, the mistakes I see over and over in helping SaaS companies to mature their finance process. One, accounting. We need just good, clean accounting. We need that proper chart of accounts set up, clear
Yeah.
revenue categories, especially if you have multiple types of pricing models. We can't commingle that revenue. Otherwise, we can't calculate retention, all the SaaS metrics that we need to calculate. So accounting, good SaaS accounting structure. That comes up all the time with the SaaS companies I help. Even if you know, if they're a couple million up to 100 million, still seeing some of the same issues that come up. And then two, at some point we have to put revenue recognition in place, right? We can't just do cash basis. And usually I say around three, you know, it might be a little early, but I'm a CFO, I'm biased. Around 3 million ARR, we have to get serious about our accounting and put RevRec in place, especially if we see a path like we're growing 3, 4, 5, or 3 to 5 to 10. The time is now. So growth dictates that urgency of when we implement that infrastructure. You know, and then it's really, you know, then the SaaS P&L setup. You know, so it's just those things I see over and over, employee coding, but it starts with that accounting foundation to the SaaS P&L, setting up a nice forecast process, and then finally calculating our metrics.
So really quite some foundational pieces there, and one might say like the basics, but still like if you don't have that in place, everything else becomes really messy, right?
Yeah, they're called fundamentals for a reason.
Yeah.
I mean, they're there for a reason. You know, just like I used to play, you know, some golf, right? Some basics, you know, setup and swing and stance and all that stuff. So no different with SaaS companies, that we have to have those basics in place. We're building that foundation of tech, of accounting data, of process, of reporting, of metrics. And, you know, there's a curve. There's kind of like we do some improvements, we plateau, and then what's that next step? You know, do we rip and replace? Do we need new tech? So it's definitely a journey.
Yeah. But hey, let's look a bit into the future as well. We're almost about to head into 2025. I think we're seeing quite some interesting things happening in space. You mentioned AI already. We did a poll around different go-to-market motions. But like, what are your predictions, you know, about the CFO and the role of the finance department? Is it like, is it changing, or is it just like we need to take more things into account? Or what's your take on that?
Yeah, I
What
think
will
it's
happen?
as we think about 2025, it's definitely getting harder and more complicated. You think about your pull and go-to-market motions and PLG, SLG, partner-led, community-led, all these different XLG motions that you hear
Yeah,
about
yeah.
now. And that's now that kind of dictates how we set up our financial infrastructure, because we can't say commingle metrics if we have an SLG motion and a PLG motion. You know, so I'm seeing that more and more now, that go-to-market motion dictates our financial data structure, our accounting structure, how we're calculating SaaS metrics, because it's very dangerous, I say, to our SaaS health to commingle metrics, to commingle numbers. You know, classic example, just say subscription SMB versus enterprise. We need two different CACs, two different CAC paybacks, no different than PLG, SLG. So we really have to be careful, because our go-to-market motion, as a CFO, I have to understand it. I'm not dictating it, but I really have to understand what's going on in go-to-market, because that influences how I set up my structure.
Yeah. And maybe obvious, but like especially if you're going into new motion, right? You may not know what it will look like. You may not have any benchmarks. So I think it's so valuable as well, like to separate it and see like, okay, what does this look like? Is it according to the textbooks or according to the pods we've listened to, or whatever, but like really be able to look into that hypothesis. And with AI you mentioned before, from a financial standpoint, will it change anything?
Do you mean, say, from a revenue pricing model or just internal use of AI?
Let's start with more from the metrics or the structure of the finances, or
Yeah.
things like that, and then we can go into the other one.
Yeah, so I think we have to be careful. Say with variable revenue,
Mm,
usage-based consumption processing transaction now, maybe AI, if we're AI first, and what kind of pricing model is that? That we keep that distinct. It could just be, you know, pure variable revenue, or is it something different? Is it outcome-based revenue that we have to look at very differently? And also then the COGS side, how much compute power, how many tokens are we using,
yeah,
from ChatGPT, and is that
yeah,
scalable? So we have to be careful with that COGS because that's kind of an unknown if we're introducing AI first product. And
mm,
you think about traditional COGS for SaaS companies, tech support services, customer success, if they don't sell in DevOps, and DevOps are hosting, architecture, compliance, security. And now thinking about, okay, not only a AWS and Azure bill, but now we've got this open AI bill, and how's
mm,
that going to scale? So we have to be more careful. Just like when I was helping companies with, more like database systems or
yeah,
database as a service, whereas
mm,
you're never going to get those pure play SaaS margins at 80%. So yeah, we have to be careful with that pricing and COG structure.
yeah. I guess we're gonna see a lot of, how to say, like blended revenue streams as well. Like there could be parts being more of a subscription fee and parts being more usage based, and all variants of them as well. But I guess that also generates a complexity when it comes to like forecasting budget. Like if you have the subscriptions, you kind of know what you're getting, the recurring revenues, maybe you have an average. Like how do you typically take that in, not only looking like what has happened, but really into modeling next year, or going into budget? Like
Yeah, I
you,
think yeah, the usually the expense side is a little easier, headcount
mm,
roster or
mm,
contractors, non-wage expenses, but the revenue side needs that where you need to see kind of the 80 to 20 rule, spending a lot of your time to make your revenue forecast or budget accurate. So what kind of revenue streams do you have? And having enough history, especially of variable revenue, is there seasonality,
yeah,
cycles to that revenue that we don't just straight line it, that we have good logic drivers. So now it's even harder on the variable side where before, all right, number of customers, seats, etc., fixed MRR, ARR. Now we need much more of that transactional data in FP&A to understand those trends so we can put some logic drivers together to understand that variable revenue and what really drives that.
yeah. And I guess that can pose some problems as well, especially for the companies like going from a more like pure play subscription revenue kind of model to introducing X% of variable components. Like we don't really have any data, right? So I guess being a bit cautious about that. So just curious then, like, okay, so with this AI, and you kind of touched upon it as well, it could also be a way of being more efficient in all departments, in all roles. Um, do you think it will also affect this trend? I think we've seen best of breed trend, more and more point solutions, doing smaller and smaller things and being better and better at everything, but in very small scopes. Um, will that continue with AI, or are we seeing a shift back to more like, how to say, like broader system taking more processes into account?
Yeah, and yeah, I've run my annual tech stack survey 5 years in a
Mm,
row now. Have my sixth one coming up. And that's a question I asked. Do you prefer an ERP solution or a best of
mm,
breed point solution? And every year it's always been best of breed point solution. Even in the last year or two where it was like, oh, there's going to be all this software contraction, consolidation, which,
yeah,
maybe is true, but things are just becoming more sophisticated in SaaS and pricing and business models. where it is hard for something to be that Swiss Army knife to do everything and do it really well. So according to my survey, people still prefer best of breed point solution. And that's so important as CFOs. We have our product roadmap for our org of how that's going to scale. What's our accounting solution? Can that scale? How are you invoicing? How are we doing rev rec, commissions, and
Mm.
so on? And we need to understand that journey, and it can't just be a haphazard compilation of all this tech together.
Totally agree. Are there any, also going back to that, looking at your own efficiency or the tools you're using yourself, have you seen a big change, or what have you adopted? Any tips for all the listeners out there
Oh,
in terms of AI, or is it
oh,
the
yeah.
chat GPT?
Yeah, of course. Who's not using OpenAI or those tools or
Yeah,
but yeah, it's interesting, because I interview founders for my podcast, SaaS
mm,
founders or AI
mm,
founders. And yeah, you're seeing, especially for the finance accounting space, you're seeing more solutions pop up who are maybe AI first. So that model is
mm,
changing, or even just accounting solutions that are just SaaS focused. So I think it's getting more specialized.
mm,
And but even we see all the surveys out there about AI in finance and accounting, and I'd say it's right. It's still such early innings. If you're a big public company, you probably have an AI strategy. Like, okay, how is this going to impact us internally? Maybe you
mm,
haven't rolled things out yet. But I'd say at the smaller, private SaaS side, of course, we know AI being used in sales and marketing. But I'd see finance accounting that's still so early that it's not. It's not. Not saying we don't want to adopt it, but it's still early.
mm. Um, and what also been apparent that the last few years is, okay, so we left the growth at all cost. Money got more expensive, whether we call it like sustainable growth or efficient growth or profitable growth, it's still like a shift, right? And it sounds reasonable. It sounds not necessarily easier though, right? So, I mean, what advice would you give any CFO out there trying to sort of balance this growth with financial sustainability? I mean, on that level, are we still back to the foundation and the basics, or are there some other components to it as well?
Well, yeah, right. We said the fundamentals never go out of style, but I think
No.
the big thing, and this conversation comes up all the time with the SaaS companies I help or the founders I'm talking to, is one, like I can calculate all the metrics, I can do the forecast, but I need to know what colors my perspective when I look at those numbers is what is our goal? Do
Mm,
we want to continue to grow at all costs? And we're fine
mm,
pouring a lot of cash into the company. Then, right, because that
mm,
will change my opinion of where to focus financially. But
yeah,
if you're like, no, like we're kind of running out of cash and we're going to need to raise another round,
mm,
yeah, then we have to think sustainability. We need that path to profitability. We need that path to break even EBITDA.
yeah,
And then we're going to look more org efficiency. How much are we investing in the sales and marketing? What does our go to market look like?
yeah.
And then, so it depends still, what does the company want? Growth at all cost or a balance? And then it's easier for me to then guide them on those decisions.
Yeah, and I guess like no matter what sort of where you're at on that scale, it's usually some kind of balance, right, between doing some investments and maybe, taking some bets, some high risk in some areas, and trying to reduce it and being more efficient, more cautious, being more smart in some areas. And you mentioned it before as well, like being able to sort of separate the different cohorts, maybe the different motions you said. I
Mhm.
guess it could be like different geographical markets. It could be different products. It could be, there are such a magnitude of perspectives, I think, where you want to sort of slice and dice your figures, right? Uh,
Yeah. Yeah, definitely as a CFO, how my board management team is looking, what data are they using to manage the business dictates how I
mm,
set up that data infrastructure. So yeah,
yeah,
our product line's getting big enough where we need a product P&L. Do we have business unit P&Ls? How are we looking at, like you said, is it geo, is it ICP, SMB versus enterprise, go-to-market
mm,
motion? So that's that operational aspect of the CFO is how is our team managing the business? Looking at that, what data do they need? And am I
mm,
able to fulfill those data requirements?
yeah. Do you think it's right to predict that we're going to see more and more companies needing to find more and more avenues to find revenue? I guess this dynamic will become maybe more frequent and more important.
Yeah, more experimentation. We know
Yeah.
it seems in the B2B world, it's a little bit hard. Like things have slowed down, and now that's just kind of how it is. But now it's even more important to measure that ROI on different channels, that we're not just blindly throwing money into different go-to-market motions without any ROI calculation there. So that's why CFOs have to work closely with their go-to-market teams.
Yeah, yeah. Really understand your numbers, I guess. Hello, Klara.
Woohoo!
Woohoo.
What a vitamin boost to listen to both of you. We're actually getting some questions in. But I really liked something you mentioned there for predictions for 2025, that things are getting more complex, especially depending on the hybrid growth motions. And that's something I actually see as well when I speak to CFOs. So very interesting discussion. Are we ready to dive into some questions?
Definitely would love to take
Sure.
any and all questions. Yeah.
Yeah. Okay. So this is the first one. There is a lot of focus on popular metrics like ARR and CAC. But what do you think about company-specific KPIs? How much attention should be spent on those?
Well, if we think company specific, yeah, we always need those, right? We can really dive into ARR, CAC, payback cost of ARR, gross profit, but company specific, usually you have bookings targets, revenue targets, gross profit scaling, EBITDA scaling. So those high levels, but also it's just what are we trying to do with the business dictates what corporate goals, but usually those are the common high level goals that I see. And plus ARR, right? That exit rate, how big of a company are we getting as we enter this year, next year, and so on.
Great. And this one I actually like. So how do you avoid KPI overload? How many and which KPIs do you recommend prioritizing?
Is that possible, Ben?
Yeah, it's
KPI
hard. I mean,
overload.
yeah,
My
there are a lot of
question.
or even what I call like MRR blindness, where we're not sure, well, what is MRR? Is it exit rate, CAR? What are we doing? Bookings. So I think, that's why I use my 5-pillar SaaS metrics framework. So it's the right metrics at the right stage. So if you're early stage, couple million in revenue, it's about your growth story. It's about retention. The rest will fill in. But as you're scaling to 5 to 10, now we need to know gross profit, margins by revenue stream, or OpEx profile, and then go to market efficiency and org efficiency. So it's a journey. We don't, sometimes I have founders reach out, hey, my board wants LTV to CAC, but we're only $1 million in ARR, right? It's just too early. So as we progress, we're implementing more and more metrics that are just standard today. And if you're listening right now and you're above 10 million ARR, right, you should have a metric in each of those boxes in my framework. And then potentially we talk about segmentation of those metrics. So it is a journey, but we have to take it as a journey. Otherwise, if someone just told you, say, hey, calculate all these 15 metrics because we're a 15 million ARR business, it's going to be overwhelming.
Yeah. Okay, I have another one here. More specific to region. So are there any KPIs specific to region? Should we in the UK, for instance, follow the same KPIs as in the US?
I do find geographic differences when I coach SaaS companies, whether it's Europe or US or elsewhere. And so I'd say this to me, of course, I'm biased as a SaaS CFO, that the structure is still the same. The KPIs are still the same. The setup is still the same. Of course, we have nuances with benefits and maybe local taxes and different things like that. But still, when I've coached companies globally, I'm still seeing the KPIs, the setup, the P&L applies to everybody.
Is it more on the cost side then, you're saying, than the revenue side where you see the differences?
Yeah, I see definitely COGS. Like I
Yeah.
see company, hey, I'm 50 million ARR and I've got 95% gross profit. There's no way. So I'd see it's definitely in the expense structure setup of COGS versus OpEx and what goes where. So that's one of my top coaching sessions. And definitely I see big differences on what people are putting in COGS.
Great. I think this is the questions now it came another one. I thought we were done with the questions. Okay. really interesting point about separate CAC and LTC ratio for different types of customers. As a business, we're moving more upmarket into enterprise deals. Interested to know how you would segment this.
Yeah. So Umar, yeah, I see that question. It's a great question because LTV to CAC, it definitely applicable. Like if you're a low price point, high volume business, self-service, or even PLG, I say LTV to CAC, is a must have because you're spending so much on inbounds, paid ads, etc. You're constantly fine tuning, but it gets a little trickier if you go mid-market enterprise. Now you may be signing $1 million deal or a $500,000 deal or 100, and LTV to CAC is going to bounce all over the place. So I'm still calculating it, but I'm maybe grouping more data together, maybe the previous 3 months of acquisition to kind of smooth things out. So I can because it's no point telling my board or investors I've got a 10 LTV to CAC and the next month it's 2 based on customer size. So I think grouping that data together, smoothing it out, but also that's where I rely on CAC payback and then cost of ARR as well, especially in that enterprise motion, and then splitting new versus expansion cost of ARR. So looking at all those metrics together and what they say. So I lean probably less towards LTV to CAC and more towards these others as you move up market.
Especially in the beginning, right? The lifetime is quite an important component. And whether that's going to be 1 year, 5 years, 10 years, 15 years will dictate a lot. And maybe you don't know based on 1 year of experience, right? I at least that's what I've felt throughout the years, that it's very difficult to claim that you're going to have, a lifetime of 20 years, but the age of your company is 5, let's say.
Right. And that's what a
I
lot of
like that.
metrics are kind of a proxy. What's that best proxy for that current metric? And if we don't have enough history, and that's where, right, CFOs kind of work their magic just to look at all the data, T3M, T6M, TTM, what is it telling me? And what would be a good proxy to throw in that LTV? Because LTV to CAC has 6 different inputs, so it's thrown around a lot, but it's more complicated than people think.
Yeah.
All right. I think we're done with the questions now. But I want to take some opportunity. We have just launched our next generation insights, and I know we are coming close to closing book seasons for many companies. So, if you're struggling with this, or you can enhance your reporting, feel free to scan this QR code and book a demo with us. You can also follow Younium on LinkedIn and also go into our YouTube channel. And we will send this as well within the next few days. Yes, this was a really power-packed discussion. Ben, I'm super happy that you wanted to join in today. Super nice to meet you as well. First time for me. And Niclas, thanks to you as well. Super nice conversation.
Thanks. Appreciate it.
you.
Thanks everyone for joining.